What is happening, guys? Today feels a little bit different. It actually feels like Monday because I took Friday off. But that was my first day of 2020 that I've actually taken off. When my son was born, I actually traded less, but there were still a couple trades to be had during those days, as well as he was born after market close. And there was a lot of hours in the day that both my wife and he was sleeping. So I did place trades, but Friday I placed no trades, so that was pretty good for me. Normally I am not, my finger's not off the pulse at all. I'm always, pedal to the metal and taking care of opportunity or taking advantage of opportunity. But it felt like, just like I've been talking about the last 2 weeks, kind of feels like things are pulling back a little bit where you're not going to miss a major trade. There's still a lot of opportunities. There's still a lot of trades to be made. I'm not suggesting that it is slowing down by any means. It's just all about adapting. You need to adapt. So for me, I traded Walmart last week, right? WMT. That's not a trade I normally will take. Tonight on Scan, I have Apple on Scan. That's not a trade I've traded since, I don't know, probably 6 months, right? To the last time I had some crazy move. So not a normal type of trade for me, but adapting to what the market is giving us. There was Tesla. Tesla's pretty much doubled in the last, well, maybe about 50% in the last couple weeks, I guess. So, I mean, there's a lot of opportunity. It's just coming at you differently. We've seen, just like I said last time on the video, we're starting to kind of see a little bit of the momentum unravel. And you saw that even with Jivo, they snuck in the offering. So that's always a know what you own situation. You don't want to get in trouble and holding crap that you don't know, what you own. Not saying that was obvious that they were going to do that, but it is known as a possibility. I even tweeted about, all the series of warrants that they had and things like that ahead of time. So that was a crazy trade, nearly 1 billion shares traded. I was short bias, switched to the long side, made a decent chunk on the way up, resorted it on the backside, but I didn't take any part in that offering because I was taking Friday off. But it is always about adapting, right? So Jivo, originally I was looking for the top. I was looking for fall through momentum. I got short around 145. And 137 was my line. I was waiting for 137 to break, waiting. It kept on soaking. So what did I do? I respected the fact that the trade was holding. I respected the plan. I got out. And on top of that, I also got long, which was, I don't always flip. I don't always flip to the other side. So that was a good move for me. I was happy that I did it. Let's talk about... I always have a couple notes. I've felt a little loose the last week and a half or so. Not necessarily going backwards, still trading well, but I am minimizing really good trade. I had three major trades in the IRA, and I overstayed on them. So I feel like I'm getting loose. I feel like I'm not taking profits when I normally would have. So that was one reason why I took off Friday, but also because I didn't feel like the opportunity cost of taking a day off was as crazy as it was, 2 weeks ago, 4 weeks ago, a month ago. I mean, literally every single day of the summer was career day after career day after career day. You could literally show up and make, a normal individual's 9-to-5 salary in a day, every single day, 5 days a week. And that's hard for me to take a day off because that is not always going to be the case, and that's why we're here. We're here to capitalize on those opportunities. So you got to kind of figure out how to balance that with life, and it's tough. And especially with a newborn, it's been tough to keep the energy level up. So I've been going back and forth with that, but finally kind of felt a little burnt last week. Took the day off. It was my friend's bachelor party. We did a socially distanced canoe trip down the Saco River, and that was a good time. So, as I always say, you got to live your best life. And I talked about, coming to the lake and doing all that kind of stuff. I'm not going to, beat a dead horse and keep on talking about that. But it's always a work in progress for me. And you know, I'm not perfect at it by any means. I'm getting there. I still need to disconnect at times, and the more you verbalize it, the more chance that you're actually going to do it. But to be quite honest, the fact that Givo offered Thursday night was the best thing ever. And I'm sorry for all those guys that were prepared, right? But you know, I would have had the most FOMO ever on Friday because I was prepared for that 250, 260, 270 parabolic and then unwind, and I know that would have been a monster trade. I know it would. It was a perfect setup, but they spoiled it with the offering. And you know what? I don't care because I wasn't trading that day, and they offered. Had they not offered and had it done that, I would have probably been checking my phone all day, and even if I wasn't trading, I'd be upset, and that's just the way it is. So that was a perfect opportunity to take that day off. Current market thoughts, like I've been talking about, I feel like it is slowing down a little bit in small cap land as far as you know, the 100, 200, 300% winners. Also, if you take a look, I wrote TRVN, VVPR, GLG, IBIO, IGC, MICT, NMTR. If you look at all the charts, you know, they've got all these big squeezes and they're coming right back down. So if you compare that to even PEIX starting to come back in on Friday. If you compare that to what has been happening, what has been working, you know, these things have been getting caught, and keep on going. Now they've pulled it right back. So the big thing to understand there is that you need to understand when you're trading something that is good and something that's trash. It's fine to trade trash, but the key is that you don't want to overstay on momentum. And that's what I was getting at with the IRA. I stayed a little bit on this trash, even NMTR. If you guys watched Sunday Scan last week, AVGR was huge, and NMTR. NMTR ended up doubling, so that was a monster trade, and I ended up overstaying and ended up unwinding and pulling back. Still a really good trade, but I only made about 1/4 of what I was up. Other than that, trade selection. Most important part of trading right now is trade selection. So you don't need to trade everything. You don't need to do everything at you know, that you normally would. You know, come to the market and just rip and just pick whatever you want to you know, trade. It is all about kind of getting prepared right now and having those 2 or 3 main watches and going with it. Givo, we talked about, it's kind of a know what you own situation. Right now we are in a good market for stalking your prey, right? You got to wait, you got to see those opportunities, you got to wait for them to set up, and don't force the trade. There's a lot of stuff that is happening right now. There's a lot of trades that are setting up, but if you are too early, you're going to end up missing it. You're going to end up actually probably losing. You're going to try to force that trade before it's ready. So if you just wait for it to set up, that's the best way. But just remember that trading junk, you're trading junk. So don't overstay. When it starts to turn, we're in a little bit of a different market. Things are starting to come in now. Things are starting to sell off. You don't want to get in a situation where you're just holding to hold, because that's where you end up getting hurt. So that's exactly what I did a little bit on NMTR, where I was in at 50 cents, added 65 cents, 70 cents. It went to $1.10. It was actually my best trade for 2020 in the IRA. Had I taken it at a buck 10, I had a ton. But instead, I ended up selling it at about 90, 85, and I think I puked the rest out at 75 cents. It is what it is. You know, we wouldn't be talking about this if it went 120, 150. But like I said on Scan, once it starts going down, they've got an ATM in place. They've got a lot of paper to sell. So it's not something that I want to fight. And that was pretty much it for what I had prepared for on Scan Time. You know, just understand what type of market you're in. Right now, get prepared. Wait for those trades. You know, I think a week and a half ago, I traded MGM, something I normally wouldn't trade. This week, I'm probably going to trade Apple, something I wouldn't normally trade. But I'm looking for that opportunity when things, you know, gap up, start to go parabolic, and start to go pretty crazy. and then that's it. They're off radar, right? Don't keep going back to the well just because it paid you one time. I see a lot of people doing that. You nailed it, you go back again, you go back again, go back again, all of a sudden you just gave it all back. So wait for that one trade that you prepared for, and that's it. So let's get right into the scan for this week. And like I said, you know, every Sunday night, you got a lot of pent up demand from the weekend. A lot of people just chase stuff off Mondays. So it's a little bit of a different type of market right now, where if you go back 3 months, 6 months, Sunday scan was like, these are the 3 names I'm going to trade. I can't wait. These are going to be A+ setups, and you know, that was it. Now, you know, there are some, but it's really about kind of seeing how things set up for the week. Are we going to gap down 300 points and we're going to have some type of rebound type trade, or are we going to gap up and have, you know, 9 300% movers and then end up having some type of unwind, just like you saw on Givo? And there was a couple other ones that started to move. PIXY, just because they saw Givo. You know, look at the volume on that thing. It had 120, 130 million shares traded. That's crazy. And that wouldn't have happened if Givo didn't happen. So you got to kind of understand what type of market you're in to be able to trade these things effectively. All right, so for the second part of scan, this is what we're looking for tomorrow. And, you know, like I said, Mondays are crazy, so we might have a lot of runners right off the open. But what I am personally looking for is RKT, Apple, and SHLL. Those are my top 3. Those are the ones that I think have the best potential opportunity for my trading style. So although I have more stuff on scan, like I always say, you need to come up with your own top prospects, your best types of trades. And that's exactly what we'd be looking to trade, or at least I'd be looking to trade. So with that said, RKT was one of Robinhood's most popular ones, and I put in a line over here just so you can kind of see, you know, the level that I'm looking for. So it started to peak out at 26s, 2610s basically, and then it ended up reclaiming that, came back, retested it as support, and carried on. So I'd be looking for that level, potentially 2580s, 26s start to base, 2620s start to base, and then carries on, squeezes out from there. That's personally what I'd be looking for. I would not underestimate what this can do. It easily could go 28, 30, 35, or anything like that. If you guys remember SPCE, it was a SPAC, and that's how they kind of became public. But they had that initial run up, pull back, collected short, collect short, collect short, collect short, squeeze. Don't underestimate it. There's going to be a monster squeeze, in my opinion, as well as a monster unwind. And if you keep on trying to find the unwind, you're going to get bent on the way up. So I'm going to be looking to join that trend until it exhausts out parabolic move. I am not interested in a short unless we have a parabolic move or weak open, failed follow through, failed follow through, failed follow through. Apple. I think Apple, the best conversation here is kind of what to expect after. But as far as a trade for tomorrow, the reason I have it on there is it's a $2 trillion company. It had a 5% move. It could have another, I don't know, another couple percent move tomorrow morning on the gap alone and then have some type of surge. So you can't forget just how big of a move that is. But if we open at 505, 508, we start to parabolic towards 512, 517, that's a reactive trade for me. I'm interested in shorting into that versus maybe the 520 level, pulls back towards 505, 508, and then, you know, be done with the trade. After that, you know, and I think that this will be interesting, and I don't know how many days we have left. If the end of the month will be, this might be the last Sunday scan before the split, I forget. But I know they're doing it at the end of the month, but I think that's a Monday, I'm not sure. With that said, how would I play this, or what am I thinking about Tesla and Apple, right? And right now there's no reason for longs to sell, because why would they sell? They're about to get, you know, 5x the amount of, they're about to get the forward split shares. There is every reason for shorts to begin to potentially cover, because they don't want to be short a multiple of what they're short now. And then, you know, there's also all the new people that just want to buy in to get a piece of the forward split. So with that said, that's 3 reasons why it could potentially keep on going up. So what happens after, right? If this is if it's going straight into this event, what happens after that? So the best example I think I could give is, if you guys recall TDOC and LVGO, they did a deal, and I got short on that deal, and it ended up unwinding. That doesn't mean the long term action is going to be bearish. It doesn't mean it's going to pull back long term. But this is a great example of what potentially could happen to Tesla and Apple over the next maybe 2 to 3 weeks. So I'm thinking that this entire event may keep on going, may squeeze out a little bit more, but then we're going to have that post-exhaustion pullback. And I think that if you relate it to TDOC and LVGO, when they did the deal together, you know, it was trash, unwound. There was no bottom, and then all of a sudden we're already back to the highs, right? So I think we could be in for something similar on Apple and Tesla. So I want to start to get familiar how it's trading, see how it reacts, and be able to trade that trend if and when it gets there. But that's how I'm going to prepare for it. I'm thinking it might be a post-news or a post-split sell-off, or maybe right into it. You know, right into the split where everybody is just kind of, you know, deer in headlights, like, whoa, wait a minute, why is it going down? So we will see. The volume is massive on Apple, but what I'm getting prepared for is a TDOC LVGO type situation. Other than that, SHLL. This is another one just like SPCE. I would encourage you to go back and look at SPCE. I'm looking for a squeeze here. Lower the better. Consolidate. Hopefully it pulls back, you know, maybe 50 cents, 80 cents, a dollar. Consolidates, ramps red to green, and gives us a chance to kind of scale into that trade. But this did a great trap in the 20s. I think it caught a lot of people probably on the wrong side. And, you know, we very easily could go and test new highs. This really reminds me of ARC-AT as well right now, and also SPCE, just without the, you know, 80 to 100 million share volume. That doesn't mean that it won't start doing that. Other than that, just a couple not as exciting kind of trades, but MTP, higher the better. I'm always looking kind of left of where this could go, so hopefully it kind of ramps up towards 250, 270s, or 250, 260s if we're lucky, all the way up to VWAP. But look for that to exhaust out, fail to follow through, potential unwind from there. I think a lot of folks are bagged from Friday. Kirk ideally gets back up towards VWAP. This is one of those where, like I was talking about at the start of this, don't try to find the top. You know, all these people are trying to find the top, it just keeps on going. This could keep on going. I only want to react to it when it has failed follow-through momentum, lower highs, set risk, or some type of parabolic move where it just goes absolutely nuts. And, you know, we saw that on TLSA, not Tesla, but TLSA. They also did a forward split as well. So that could be one to look at as far as Apple and Tesla. But TLSA, just keep an eye, you know, on that. Understand that, you know, you don't want to jump in front of stuff. But remember, once the backside starts, the backside is always much bigger than you expect. It's much longer than you expect, and you're trying not to miss this much of the move by trying to find the top. So if you just let it crack, let it put in the top, you're going to be able to have this much more if you're not trying to find this and losing this much more. PIXY, volume crazy. Again, this one is a situation where you know, they're moments away from raising money. Everybody knows that, so that's like the short thesis. So I would be super cautious on the long side. I would watch your size. Doesn't mean it can't squeeze. You know, I might dabble. I might trade it small because it could turn into a fun trade, especially if everybody's loaded for a potential raise. However, you need to know what you own, and you need to know that if you're long 20, 30,000 shares and they raise, you know, a buck or two lower, that sucks. So just make sure you know what you own. Be careful. Higher the better. Otherwise, 550 push, potential unwind from there. PDD, huge wash off open. That would have been fantastic to nail, but obviously it kind of had to be there. You can see it just literally puked out right off the open, and just it was early. It was about 6 a.m. or so, but kind of had to be there. Otherwise, you know, obviously there's no edge there. But a lot of people were looking at that. A lot of people have traded this one. Those kind of moves happen off the open all the time. So be aware of that. Be aware of tomorrow morning if it has a weak open. Sometimes, you know, you get a little confident, and then all of a sudden, just that market, the imbalance at open, 9:28 a.m. or right off the open, it's just complete opposite of pre-market action. So I always caution people when they're trading this one, any China names, especially like JD, for example. You want to be cautious because it can completely reverse right away. So 9:45, 10 a.m. I like on a situation like this to join. Keys. Another one that pulled back, and that was right off open, stuffed right off the open, pulled back. So basically, for me, look left, and that brings me to about 97, 96.50s as ideally a gap up and fail. Completely unwind from there. PEIX. This one, example of what I was talking about to start the day. Sign of the times. It's a little bit different in this market. Things are starting to unwind. So higher the better. Easy look left. Right away. I want 420, 430s range. I want to go back up towards the prior levels, or even if we're lucky, we get back up to VWAP level where it pulled back. One thing to kind of keep in mind, that was a late afternoon pullback. So, sometimes it's just kind of a Friday afternoon sell-off. You don't want to get too aggressive if it starts to base at 420s and you're adding, and then you get blown out to the 440s. So I'm going to be watching for 420, 430s to peak out. Join that trend. I think that we have some room to 380s, potentially 350s. Other than that, last couple, ANTE. ANTE, I am going to be looking for potential trend join. Nothing exciting about this. It just looks like one of those liquidity traps that I talk about. 30 million shares to hardly any shares. So if 110 starts to base, I'm interested as a potential swing. AESE has been a great trader, but just like I said in chat on Thursday, 220 is your level. So you got to assume 220 is going to fail every single time. Sell into that ramp. It's fine to hold a core, but make sure you're a seller into that level. You can always re-add if things start to hold trend a little bit. HARP, HARP, week open, look for that breakout. I am very much interested. We've got a nice peak here, 1560s, then it busted through it. So basically I'd want dips versus that level as my risk, as a potential breakout. IMBI, nothing exciting, but it's starting to get the wicks. There's a buyer in the tape. I'm going to be interested in a trade like that. FLDM currently long. As you guys know who are in the room, I've actually been long since that first day right here with the volume. But I've been I was patient with it, and then I just sold it all. So then I restarted into a position the other day, and so far so good. Last but not least, BIGC, another one of those recent IPOs, just like RKT, had a crazy open, straight down since. Maybe we have some shorts stuck now. So basically what I'd be doing is typically I look back to where the prior resistance was, and ideally a pullback, or at least I want to make sure that I'm not crazy attached to the name if it pulls back to that level. So I don't want to be selling massively into the 73.50s. I want to be still an open mind. And then probably right around here, the 75.50. So I'd want to see it flush out into this range, potentially buy a starter versus 73.50s, consolidate. Once 75.50 starts to firm up, I would probably scale into a winner. Other than that, as you guys know, I always have the staying familiar section. Staying familiar section is basically stocks that I'm going to set price alerts for. They're all names that I am interested in. I'm not going to go over them right here. You can click through under the description, go to the scan, go to the Investors Underground website. I basically look left, and just to give you an idea, AAPL. This was one that I have on the staying familiar scan. So basically what I do is I go 1 minute chart, kind of go back a couple days, and I look, all right, where do I want to know if this thing busts? So I probably want to know if it busts through the highs, and I'd probably want to know if it breaks under this level. Otherwise, I don't care about it. I don't want to know about it. And usually, just in case I miss that one, I put another one right at this level here, right at the next level of support. So that way, I'm not, using all this precious real estate on my screen space and trying to watch everything. And instead, I just use the IU price alert feature, and it just tells me right away when it hits that target. So I've got a bunch on there, including Roku. Roku's pretty tight right now. So is what's the other one? BYND. Those are like super, super tight. So they're very close to a big move, either a breakout or a breakdown. So we'll see what happens with those. And I think that's about it, guys. So I think I need to pick a winner for this this week, and I did not prepare. So I'm going to go ahead and find one right now. And we can do a couple of shirts. So JR, Ray Herman, we have a new Look Left shirt coming as well. And Jar Jar. If you email me, webmaster@investorsunderground.com, you will get a t-shirt this week. Thank you guys for leaving comments. As always, leave your biggest takeaway. Be careful out there. The market is shifting. Liquidity is shifting a little bit. Coming prepared is probably the most important it's been. Not necessarily on Mondays, like I said, because there's a lot of pent-up demand over the weekend, and so that we may have a crazy open, or we may not. And if we don't, then I'm going right to RKT, Apple, and SHLL. Those are my main watches, and we'll see what else comes up on watch pre-market. I hope you guys enjoy these. Thank you guys always for your feedback. I get a lot of comments about it's nice to see the outdoors instead of just the indoors and the same screens every single time. So we'll see what happens. Maybe I'll do more of these, maybe I won't. It just depends on the weather, I guess, and what's happening. So that is it, guys. We'll see you tomorrow morning in the room.